Hello, everybody. This is Brett with Digital Energy, where we discuss Bitcoin, other digital assets, and the incredible crypto revolution that's sweeping the globe. In today's video, we're going to talk about the Bitcoin market outlook for the week of February 6th, 2022. So if you're a Bitcoin bull or hodler, you likely have had a big smile on your face over the last 48 hours after we smashed through the $38,500 price range and rocketed higher to nearly $42,000. If you're a subscriber to the channel, you know that back on February 1st, we posted a video talking about how Bitcoin was poised to break through that resistance at 38.5 and rise up to the $42,000 to $44,000 range, which is exactly what we saw happen last Friday. And you can see that breakout right here. Now, after the breakout has occurred, what are we expecting for the coming week? And I will say that for myself and the folks here at Digital Energy, we are looking for Bitcoin to break through this resistance at the $42,000 range and move higher into the $45,000 to maybe $48,000 range. Now, since the breakout on Friday, you can see here in the daily chart that Bitcoin is struggling, or at least just moving sideways at that $42,000 mark. Now, $42,000 is a strong psychological barrier because it's a round number, but also because you can see a lot of prior activity here around that range. And as a general rule, when you fall below a range that has seen a lot of prior activity, a plateau, as you see here, then when you rise back up to that level, it will act as a level of resistance. But once we break through it, then it will also act as a level of support. So as I mentioned, I believe that what we're going to see here is a break this coming week through the $42,000 range and higher up to around 45, where I believe we'll have another little level of resistance, and then possibly as high as 48,000, where we will experience resistance from this prior plateau. So why do I think that we're going to move higher? Well, first I'm looking at the charting. And one thing that I'm looking at is that over this past 3-month period of time as we've fallen, the weekend pattern for trading has typically been that if the week was higher, if the trading during the week was higher, we would see a little bit of a pullback on the weekend. Whereas if the week's trading was lower, we would see a rise. And that's exactly what I had expected to see after this big pump on Friday. But that is not what has happened. And we can see that most effectively in the hourly chart. So here's the hourly chart, and we can see the breakthrough at the 38.5 range and the big pump higher to 42. And then what do we see over the weekend? Well, we see just this sideways pattern, but a pattern in which, if you look here, we're continually banging on that $52,000 level. Here we test it, we're rejected. The buyers come back in, push it up, we test it again, we're rejected. And then we trade sideways, we test it again, we're rejected. And we're right now, as we sit here on Sunday, February 6th, about 1 o'clock Rocky Mountain time, we're pushing right against that $42,000 range again. Now, again, as I mentioned, in prior weeks over the last several months, we have seen that the weekend trading has been counter to the week's trading. So I was very much expecting a pullback, maybe down into the $39,000 or $39,000 range, but we haven't seen that, and we are continually testing the $42,000 range, and I expect to see us on Monday or at least throughout this week breaking through that range. If we go back to the daily chart here, then you can also see that we're setting up in what's called in candlestick terminology a potential bullish mat hold scenario, or as I like to call it, a triple P, which would be a pump, pause, and pump. So what we're seeing is a push, a little bit of pause where the buyers catch their breath, and a lot of times that little pause can even see a downtrend, but that's not what we're seeing here. And so that indicates to me that we're setting up after this pause for another push higher. So in total, I think that the charting patterns look very bullish. What else am I looking at? I'm also looking at the on-chain data, which continues, at least in my opinion, to be very bullish. And here's a couple of examples. First, as we discussed in our February 1st video, where we were talking about the breakout, we see that exchange reserves remain low. And if you remember from that video, which again is linked in the description below, what we see is that we are at multi-year lows of exchange reserve. What is exchange reserve? Exchange reserve measures the amount of Bitcoin that is on the reserves that can be actively traded. And when reserves go low, what that tells us is that the people who are buying Bitcoin are moving some or all of that Bitcoin that they purchased off the reserve and into wallets, private wallets. What does that mean? It means that there's less Bitcoin to be traded on the reserves. If there's less Bitcoin, less supply, then the laws of supply and demand would say that prices will tend to rise. And we can see even after the big pump that we had on Friday, we're still looking at very, very low exchange reserves, although they have blipped up just a very little bit. Another important indicator that I'm looking at is the estimated leverage ratio. Estimated leverage ratio is a measurement of the leveraged positions, both long and short, that are in the market. And you can see that we're at a very high point here. The highest point that we've been, again, over multi-years. What does that tell us? That tells us that there's a lot of leverage in the market for Bitcoin right now, which means that you could see pretty dramatic moves. And I believe, based on some other metrics, that on net, most of these leveraged positions are short. And if that's the case, if we are, as we predict, able to bust through 42,000, move to 45, and maybe even to 48, many of those leveraged short positions are going to get liquidated. And when short positions are liquidated, that pumps the price even higher. So that is also one of the reasons that I believe we're going to see a pretty dramatic move up in Bitcoin's price in the immediate short term. And a third indicator that I'm looking at is the Fear and Greed Index. For those of you not familiar, the Fear and Greed Index is a measurement of the market sentiment. And we are coming off a period of extreme fear. You can see last month we were at 18, and I actually believe it fell even down as low as 11. So over the last several weeks, we have been at a level of extreme fear. Now, as we've leveled off, and especially after Friday's pump, you can see that the fear is subsiding some, but we are still, very much in a level of fear. The Fear and Greed Index for me is a counter indicator. If we are at levels of extreme fear, that tells me that it's very likely a good time to purchase because everyone is running out of the burning building. I want to be running in there to buy Bitcoin at a really, really good price. So I think that because we are still in a level of fear, most people are fearful. There's many people that are still selling or perhaps have already sold, and there's just not enough sellers to hold the price lower, and we're going to move higher. So there you have it, folks. This is Digital Energy's market outlook for the week of February 6th, 2022. Look for a break through the $42,000 level of resistance and a move higher to 45 and possibly as high as 48 before we experience substantial resistance again. This is Brett with Digital Energy wishing you a great trading week, and as always, protect yourself out there.